Welcome to today's History of the Upper Ohio Valley. I'm Bob Connors, your host. Today our special guest is Diana Kennon. Diana is a wonderful lady from St. Clairsville. She's a certified public accountant and a principal at Perry & Associates, certified public accountants, located in Wheeling and in St. Clairsville. Diana is a graduate of Ohio State University. She holds a Ohio CPA and a West Virginia CPA license and was previously owned her own CPA firm in St. Clairsville. She's a member of the Ohio Society of Certified Public Accountants. Diana is one of the founding officers of the Ohio Valley Oil and Gas Association, which was developed to help local business owners understand and participate in this booming gas in our area. Diana also serves on Belmont College Foundation Board, is a treasurer and a board member of Sports World Ministries. She has been on the board of Belmont County Colleges, of Belmont College Foundation Sports Ministry for 6 years, is that right? So you do a lot of stuff. How long have you been a CPA?
I've been a CPA for 25 years.
25 years.
25 years, yes.
Wow. So now you know a few things about taxes, I'm assuming.
I've been working with it for a long time, so I definitely feel like I know something.
Well, we're going to find out. We have some questions for you today. You are currently practicing public accountant with and principal of Perry & Associates, CPAs. What does AC mean?
Accounting Corporation. It's a West Virginia designation for CPA firms.
Oh, okay. I didn't know what that was, so I thought we better ask that. And you're in Wheeling and St. Clairsville, your company, right?
Wheeling and St. Clairsville, yes.
Well, with all of that, we know that there's been a massive change in our tax code. And so let's talk a little bit about Tax Cuts and Jobs Act of 2017 that Trump signed in December. And it is supposedly the most extensive tax changes since 1986.
Yes.
So I was wondering if you just fill us in a little bit on what that means to people.
I sure can. Back in 1986, when Ronald Reagan was president, he made extensive changes to the tax law. And we haven't seen anything nearly as big of a change until now. President Bush did do tax reform in 2001, but this particular law, I think, is going to change the way we think about taxes and how taxes affect us. So it is a significant change in 2018.
It's really big going forward.
Big going forward, yes.
So why do you believe it's going to be, these changes are going to be really significant?
Well, for a lot of years, we have used tax law for special interests and to basically, it's been a political tool. And while this tax law has many items in it that are still left for special interest, it's certainly not simple in the way that they were talking about wanting to get it simple. It starts to focus on what the purpose of tax law is, and that is to raise revenue for the federal government, not to use it to appease special interest groups. And so there's a big change in the way this tax law feels, and while it's not as far as a lot of people wanted to see it go, it is a huge step, I believe, in the right direction.
Going in the right direction.
Yes.
Can you explain how itemized deductions are reduced?
Sure.
So people understand a little bit.
I sure can. Most people all people take either the standard deduction or itemized deductions. And the standard deduction has been $12,000 approximately for married people and $6,000 for single people. What the new tax law does is double the standard deduction. So the standard deduction now for married couple is $24,000, and these are not exact numbers, but approximates. And for single people, $12,000. So what that does is it allows a larger deduction without itemizing. Most people, there was about 40% of people who do itemize. That's probably going to go down to about 10% because of this doubling of the standard deduction. So it's making tax law simpler, and it's making it more even across the board.
So just so that we understand this. The $24,000, that's for a family, right?
That's for a married couple.
For a married couple.
Yes.
Let's take that as an example. What that means is every single person who files, regardless if you're poor or wealthy, you're going to get that $24,000 that you do not have to do anything with. Your taxes really start after that.
That is correct.
So whether you're wealthy or not wealthy, your taxes, you're
Are
going to pay
lowered
no
by
taxes on that
$24,000.
first $24,000.
Exactly.
So you're basically giving the lower income people some tax write-offs that they don't have to do anything to get.
Exactly.
A big one.
Exactly. It went $12,000 basically for a married couple now that won't be taxed, that was taxed before.
$12,000 for
A married couple.
a married couple.
Yes, an additional 12,000.
Oh, so that's additional, yeah. So
Yes.
that's really a pretty significant change
It is a significant change.
to the average Joe out there.
So say you were a married couple at 50,000 last year or 2017 with this filing, and you file without itemizing standard deduction, it would be 50,000 less $12,000 approximately. So you were going to pay tax on $38,000. Now you're going to pay tax on $26,000. It's a very big difference.
Yeah, and that's pretty. I think that is one of the most important things they did, and maybe the least understood.
I think you're right. I think where the trouble comes in is that they did eliminate the personal exemptions. So it isn't quite a $12,000 deduction depending upon what you have and how many children that you have. But to make up for that, they doubled the child tax credit. The child tax credit is better than a deduction because it's directly against tax. It's not against income. So for example, if you had the 50,000 and you were less than 12, so 38,000, you would be taxed on that, and then say your tax was $5,000. Then you got a $1,000 credit per child. So if you have 2 children, you would have a $3,000 tax bill. In this law, you would have $26,000, and the tax on that is probably $2,600. If you have 2 children, it's going to wipe out that tax completely.
Because that's pretty significant.
It's very significant.
I understand that nearly 50% of working people who pay taxes really don't pay any taxes because of these kind of laws. In other words, about half the population aren't paying income tax.
I don't know if it's quite half, but it is a significant number because earned income credit, child tax credit wipes out a lot of the tax for people who are lower income.
I think that is a pretty significant change for the average person.
For the average person.
Yeah, that's great.
And one of the things that it did too was that it broadened the brackets. It is eliminating the marriage penalty for everyone except the highest earning tax brackets.
You know that we hear a lot of discussion on the news about the rich get away with murder, they don't pay any taxes, and this bill was just written for the wealthy. I don't believe that to be true. What do you think about it?
Well, every single tax bracket has been lowered. So to say that it only benefits the wealthy is definitely, I totally disagree with that, because every single tax bracket has been lowered. So if you were in the 15% tax bracket, you're now in the 12%. If you were in the 39% tax bracket, you're now in the 37% tax bracket. So it lowers taxes for everyone. And one of the things I think that most people don't understand is that the top 5% actually pays about 80% of the total tax. So you can't give a tax break if someone's not paying taxes.
Right, you can't get a tax break if you're not paying any taxes, and if you.
Right.
And I think the government is kind of like most everybody who thinks about money. If you want money, you go where the money is.
Right.
And the people who are making money, earning money, are the ones they're taxing.
That is exactly right.
And I think another thing that I hear a lot you might want to comment on, people tend to think that they'll say, well, the government gave those rich guys that money. They gave it to them. Can you explain how government doesn't give anybody any money in taxes?
I guess I should maybe take a step back and just explain where the revenue that the federal government gets actually comes from. Income taxes, excise taxes, different penalties and fines of companies. The money comes from the American citizen. That's where taxes come from. So if someone makes $500,000 and they pay $100,000 in tax, and they get a tax break where they only pay $90,000 in tax, the government's not giving them anything. They're just taking less of what they took before.
Sort of letting them keep a little more of their own money.
Letting them keep their own money, exactly. And that's a great way to put it. That's exactly right.
Now, I think that's one of the things that a lot of us are not up on. We believe the politicians who like to play games with this and say that rich people are getting all the breaks, when that's not really the truth. The rich people are actually paying the bills.
That is correct. The wealthy people are paying the bills.
What about tax changes that people can expect in 2018? Can you think of anything?
Other than the lower tax
personal tax
brackets.
changes.
Personal tax changes, sure. If you are itemizing, you can still itemize if you have more than the 24,000. I'm going to use married couples as my example. If you have more than the standard deduction of 24,000, what has changed is that state and local taxes are no longer unlimited deductions on Schedule A as an itemization. They are limited to $10,000, okay? Which for most people in our area is not going to make a whole lot of difference, Bob. But for the high tax states, California, New York, New Jersey, it's going to make a huge difference to them. But what has happened in the past is a lot of these states that have high taxes have thought, well, our residents are going to get a big federal tax break from this, so it's not going to cost them as much as they're paying because they're going to get a deduction. And they've used that. And so we have subsidized, basically, the spending habits of the larger states and those states.
That's something I did want you to mention today is I think there's been a lot of misunderstanding about California, New York, New Jersey, big tax states who were in the past, tell me if I have this correct, who were in the past getting to deduct their state income tax or a portion of it from the federal government to reduce their total federal tax.
Yes.
By this federal government basically is giving them the state a break on that.
Well, giving their residents a break. So the states have been taxing higher because if they tax $1,000 and their residents save 25% of that, then they're really, quote, only paying $750, so why don't we raise it to $1,200 and they're going to get a break. And so there's been a lot of that.
So the states like Wyoming and other states they're basically funding this because the money has to be made up somewhere.
Right, right.
So other states are paying the state tax for New York, New Jersey, and California's high tax, state tax.
In a roundabout way because of the breaks that the federal government was giving for those income taxes.
So this is another angle that occurred to me that I wanted to ask you about. Wouldn't that mean that these states have been benefiting unfairly compared to other states if they're getting some break that they feel they're losing something?
Well, they really do feel like they're losing, and they are, because they know that their residents are not going to tolerate the high taxes as much. Because you and I know, if we look at a charitable contribution and we're itemizing already, or we look at our state income tax and we say, well, yeah, it went up a few $100s, but I'm going to get a federal tax break for that, so it really isn't costing me as much. So you don't get as upset about it, or you don't try to change policy maybe as quickly as you would if you don't get that deduction and you're really paying out the high taxes and not being able to utilize it.
And I think that was one of the things that people were a little confused about.
Sure.
Because the states were screaming, oh, you're taxing our people, you're raising our taxes. I don't think they really raised taxes in those states.
No. They just are making it more equal.
More equal to the rest of the country.
They're equalizing it. for the rest of the country.
I'm glad you explained that, because that's one I think a lot of people are not understanding. We've talked a lot about personal income tax.
Okay.
Now let's get to the business side of it.
Sure.
To what's happening with the businesses and changes.
Well, the biggest thing that has happened is businesses across the board are getting a reduction in their tax rates. Corporations, C corporations, are actually getting a flat tax rate of 21%. The rate before was 37%. So that's a 16% decrease in their federal income tax. And we are already seeing what those corporations are doing with that 16% savings. They're passing it along to their employees. They're talking about investing in their companies. And when they invest in their companies, they create new jobs. I know that several of the large companies have announced pay increases and bonuses. Walmart, Home Depot, Starbucks, just to name a few. And so they haven't really even seen it in their bottom lines, but they know that they're going to have it, so they've started to trickle it down to their employees.
So they can see that.
And
So, yeah, go ahead.
I was going to say, and what we need to remember is that corporations don't really pay taxes. Consumers pay taxes, because if they have a 21% tax rate or a 37% tax rate, if they save 16%, then they could even lower their prices to be more competitive. So you might even see a little bit better pricing when you go to buy things. But if they have to pay that tax, in order to survive and break even, they're going to pass that cost along to their customers. So consumers pay tax. Corporations don't actually pay tax.
On this business tax, it looks to me like by that 16% reduction, that money that was going to the federal government from the companies was not going to the employees.
Correct.
Because the government took it.
Right.
Correct?
That's correct.
So they couldn't lower their prices because they have this big chunk of money that's going to the government. Before they can do anything that's overhead, you're going to pay all this money, so they have to say when it's time to think about a raise for the employees, they have to consider that big giant tax bill.
They sure do.
And whenever they found out that they're not going to have to pay that much and they're down to a competitive rate, they're giving money to their employees, and they did it immediately.
They did it immediately. They did. Because corporations want good employees. They want to keep good employees because it makes them better and more competitive. And I think there's a misunderstanding about corporations to begin with. First of all, they're not humans, so they're not emotional, but they want to succeed. That's their goal. They want to make money and they want to succeed. And one of the best ways to succeed is to have a stable workforce. And if you can pay your people more, then you're going to have a more stable workforce.
I think that's an excellent point, and we hear so many times, unfortunately, politics gets involved in this, and we have so many politicians who tell people that corporations won't do that they'll keep that money in a can in their yard, but they won't reinvest it, they won't give it to their employees. And I'm really not sure that many people understand how valuable the employee is to the employer. They're thrilled that they can give this money to these people, because they can get better people.
Exactly. And better people result in better product, which result in happy customers. And happy customers are willing to come back again and again.
So you're kind of saying that the company has to make some money in order to give it to the employee.
Exactly.
And if the government's taking it, there's less for the people.
Exactly.
And prices on everything will likely, I think, will start to come down a little bit.
Yes.
Because of their costs. Some of these companies are restructuring already because of this, and they will come out with a better service for their customers.
Right.
Because that's the goal, stay in business.
To stay in business. That's the only goal of a corporation, is to be in business.
You mean it's not to take people's money off of them?
No.
It's to stay in business.
And in order to stay in business, you have to make a profit. And so when they're not paying those high prices to the federal government, they can use the money to make a better product, to have better employees, and to service their customers better.
That's great. What about corporations? And we talked business, and you mentioned corporations a little bit, but What more can we share with our viewers about?
One of the things too
Corporations.
that has happened is with the lower tax rate, a lot of companies that have located outside of the country because of lower tax rates will, they're making it easy for them to return to the United States. Most companies don't want to leave a stable environment. The United States is the most politically stable country in the world. If it makes sense to be here and they can afford to be here, they want to be here. And that's what this tax law has done. It has created an environment where companies are going to want to be here. And Apple has announced that they're going to spend about $500 billion investing in the United States in the future. So we're seeing huge dollar amounts talked about being invested in the United States.
Yeah, that's something I think that we can go over a little bit more to help me refine what this means. Now, the word inversion, is that when the company's located in California, but they open an office in Spain, and they say, well, that's our headquarters in Spain because my taxes over there are 20%, and over here in America they're 35%, so I make a lot more money if I put my office in Spain.
In Spain, right.
That's what you mean by having their money offshore versus coming back. They're
Back.
not hiding it in a box in Spain.
No, they're not hiding it in a box. It's just a better tax rate if they had their corporation headquarters in those other countries. And Ireland was a big one where companies would have their headquarters because it had a lower tax rate. So what was happening is these companies that we all buy from on a regular basis had their headquarters in these foreign countries and were keeping the funds out of the United States because when they brought them back into the United States, they were going to have to pay tax. So now the tax law has addressed that, and they've given them a low rate to bring the money back into the country, and a lot of them have announced that they're going to.
So for the last several years, because of our government, our representatives, these big corporations have been keeping money that they're now giving to their employees.
Correct.
They were keeping it in foreign countries and maybe paying employees there more because they had to run a business there too. And now that's coming back here just because our government has changed with this president saying, no, we're going to lower taxes for corporations. He wasn't doing that because he thinks corporations are really the good ones. He knows that's where the jobs are.
He knows that's where the jobs are. And one of his biggest campaign promises was that he was going to bring back the middle class. And we have seen a huge gap that has grown over the last 25 years. And you had your corporations who had money, you had your poor, but the middle class kept shrinking. Well, the reason was because there weren't companies here investing and hiring workers. So it'll be interesting to see what happens in the next year or so.
Yeah, these I know people are interested in these jobs and how this will work. Maybe you can comment on this. Let's say Apple, they're going to bring $500 billion, build a new campus, start a new business there. All of those employees who work there are not the only people who are going to benefit from that. That entire community will now have other jobs that will build around servicing that corporation that moves into that community.
Exactly. Whenever there's a big employer and you have $1 of wage, it's been estimated that it actually ends up being $7 in the economy. So if you bring somebody in with $100,000, it would actually generate $700,000 of economic development. Because whenever you have a business and you have the employees there, they're going to need all of those services. They're going to need places to live and places to eat.
Cars to buy, gasoline to buy, food to buy.
All of those things. Plus, depending upon what kind of industry it is, for example, in our area, if we would see the cracker plant come here, the byproducts of the cracker plant that are used for manufacturing, those kind of manufacturers are going to start locating themselves here too. So then you've got those types of industries, plastics, fertilizer, that are going to locate close to the supply because it's going to reduce their costs. If the supply is right there, they can reduce their costs and they're going to hire people. And then you're going to need the same things. You're going to need housing, and you're going to need food, and you're going to need restaurants and clothing stores and auto mechanics and everything that goes with what people who are working full-time need. So,
Yeah.
yes.
So all of this discussion we've seen with politicians in particular and some of their talking heads, that this is a big giveaway to the wealthy, and it's going to hurt the middle class, and all of that stuff is nothing but...
I don't believe that that's what we're going to see.
No.
And when I have actually started looking at my own clients, the majority of them are going to see a nice decrease in their taxes. And also, people are going to start seeing it in their paychecks now, because the new withholding tables have to be implemented by the middle of February. So they're going to start seeing a lower federal tax in their paychecks, and they'll have more take-home pay because the rates truly are lower.
So they will actually get to feel what this feels like to have
Right.
that extra money. And what do you think they'll do with that extra money?
Well, they'll do a lot of different things with it, but they'll spend it. They'll
Yeah.
spend it on the things that they haven't been able to spend it on in the past. So most people will spend it. Some people will save
Yeah.
some of it. There are lots of things that people
People
use
will
use their money on, but most of them will spend it.
You went to work with Perry and Associates, right?
Yes.
And what kind of services
Well,
will you be offering now with that?
Perry and Associates is a full-service accounting firm. They are headquartered in Marion, Ohio, and they have offices here in St. Clairsville and Wheeling. And we prepare individual and business tax returns. We do a lot of business consulting. Our firm can do auditing services, financial statement preparation. We also do forensic accounting, so if someone had an issue where they needed to do some investigative work, we have a team that's very good in forensic accounting. We can help the small businesses, which is where I really like working, with their business. Plus, we can help them with succession planning, retirement planning, and estate planning. So we are a full-service accounting firm.
Well, that's really good. I think it's important. I think it's a sign that this area is growing. What's going on with Perry and Associates?
I do too. The expansion that they've done has been a direct result of more business work and more people needing work from accountants. The big lease bonus checks, the big royalty checks that people have been getting, that is a wonderful thing to have happen, but it also creates a lot of financial issues that people need help with.
So those people in particular will definitely need more information and assistance with their taxes.
Yes. Yes,
Things will change with them.
definitely. And the changes that are happening.
Well, that's good. Do you have anything else you'd like to add?
Well, one of the things that we didn't talk about real quickly is that the tax benefit was not just for large corporations. Small businesses are also going to get a tax break because there is a 20% deduction from their net income before they pay tax. There are a lot of rules and regulations with it, so I would highly recommend that a small business go see their CPA as soon as possible, just to talk about how it's going to affect them in 2018. But for this area, a lot of people are going to see their taxable income decrease.
That sounds excellent. That's good. Well, if that's about it, I want to thank you for coming by and sharing this information with our viewers. I'm sure people learned something tonight.
Well, I really appreciate the opportunity to come and talk about it, because it's one of those things that I have a great passion for.
I can tell that. Anyway, Diana Kennon, thank you very much. I
Thank
appreciate
you.
the conversation.
Thank you.
We'll
Video and media technology have changed dramatically over the years. At ESV Teleproductions, we have the knowledge and the latest equipment to complete your project that will be a cut above the rest. The next time you need media produced, call the award-winning professionals in St. Clairsville, Enchanted Sound and Video, ESV Teleproductions, 740-695-5289.
And we're back. Tonight we wanted to go over a little bit of what's going on in the world. There's so much right now to cover that we thought we'd go with DACA. And I'm sure that many people have been paying attention to what's going on with this discussion we're having. But there's some, can we put that slide up that we had about, we've got, we'll get to that. We have chain migration. And that's really a significant thing that's part of this discussion with DACA. One of the most misunderstood things about these people, they're not children, they're adults. And many of them were brought here when they were over 15, I think was the youngest age, up to under, they had to be under 31 years old. So they're not really kids anymore. But there's a lot of misunderstanding about who the DACA is. These people, there are a little over 800,000 of them. They had to apply for this application to become a DACA. This was done by former President Obama in 2012. And you had to be, the regulations said you had to be age 31 as of June 15th, 2012. And you had to be in the United States reaching your 16th birthday when you came to the United States. So there were certain things and criteria you had to meet. So 800-some thousand people did apply for that, and that gives them, this will give you, what you can see on your screen right now, gives you an idea of how many people this country is bringing into this country. Every hour, the U.S., you can read this on your screen, and I'm going to say it in case you have trouble, permanently resettles enough migrants on the basis of family ties to fill a small auditorium. Every day, the U.S. resettles enough migrants on the basis of family ties to fill a large high school. Every week, U.S. resettles enough migrants on the basis of family ties to fill a college basketball arena. Every month, the U.S. resettles more migrants on the basis of family ties than could fill an entire football stadium to capacity. And every year, the U.S. resettles an immigrant population larger than the size of Washington, D.C. Now, this is something we wanted to share with you so you understand just how big this problem is. It's not just a few people. Many of these people coming here do not speak English, do not have the kind of skills that they need to succeed in working beyond a low-income job, so many of them are going to be somewhat dependent or completely dependent on the government. That's one of the concerns that many of us have. To give you an idea, that DACA, those 800,000 people, in this country right now, that number actually is 3.6 million people of the same age group as the DACA group. The difference between these two numbers, the 800,000 people, they made an application out to be here. The 3.6 million have no application, and they're still here. And this is what they're going to have to discuss in Washington. What are they going to do with that other 3.6 million? They're not a part of DACA, so they can't be a part of the solution. However, when DACA is solved, if these people are made citizens or whatever they happen, do you think it's likely that that other 3.6 million people are going to say, me too, and go to court and fight and say, we believe you did it for them, you have to do it for us? This is going to be a massive fight trying to solve this immigration issue. And it's one that is high time that we do approach it. I'm happy to see that we have a president who wants to take care of it. The wall is a part of that. But the question that's missed on the media right now is the fact that the wall is really not just a wall. That's not what the president meant all the way across the country. It's various things across the country, including many, many miles of wall. But some places there will be other means of keeping people out and watching how to secure the border more carefully. Why is that important before we do anything with DACA or any other immigration system? because if we don't stop it, it's sort of like if you're in a boat and it's leaking, water's flushing in, and you have people in that boat, you have to patch that hole and stop the water coming in before you're going to be able to bail out the existing water and clean it up and make it a safe boat. The same thing is true with immigration. If we don't patch the holes along the wall, these millions of people who are in this country now, which some estimate as high as 20 million, will be replaced quickly, just as he did when Ronald Reagan had an amnesty program was supposed to be for 1 million people, and it turned out that they had 3 million people. Now we're talking about 800,000 DACA people and millions more who want to become citizens. We need, with the number of people we have who want jobs and our economy, we need to get some of our own people going before we bring more. So the comment tonight is, let's give some real thought to building that wall and understand that without that security on the border, there really is nothing else we can do with the problems of immigration on either end. So the idea is, let's get a secure border. And make no mistake about it, there are people in our political world in both parties who want this flood of immigrants coming across the border for different reasons, some for votes and some for cheap labor to drive down the cost of labor in this country, which affects you who work in this country, because if you're competing with somebody who will work for a lot less, it makes it hard for you to make more money. So with that, I'll say good night. Thank you very much for joining us. We hope you enjoyed tonight, and we'll see you around next time.